Hello everyone, welcome back to our YouTube channel. We are PGN Accounting Group. Welcome to the final part 3 of the How to Create a Monthly Budget for Beginners, a free hands-on zero-based budget in Excel and Google Sheets. You guys made it to part 3, congratulations. Obviously, part 1 and 2, talking about budgeting, the importance of budgeting, laying down the foundations of budgeting before you start. Very crucial, very important. Watch that video if you guys have missed it or if you want a refresher. Part 2, we talked about step-by-step guide of creating a budget, of listing out your expenses, listing out your income, listing out your debt, your expenses, and so on. And how to create a zero-based budget. We didn't actually go through the mechanisms of creating it in Excel, which is what we're going to do today. We're going to do a walkthrough of creating and updating a budget, but we're going to be using our free budget template that we provide our viewers, our customers, our clients, whoever wants it. It is our pleasure to give you this budget template for free so that you can start budgeting today. That is our goal here. We want to benefit you guys. We want to educate you guys as much as possible with the content that you desire and you need in your life. And we just want you guys to grow financially, build some financial success. And how do you start that? You start that with budgeting. It is a foundation that you build financial wealth on. Now, before we get into this walkthrough of creating and updating a budget, we want to encourage you, and we would really recommend and desire if you guys hit the subscribe button and follow us on Instagram. It really shows us how much you guys support us. Please share us with your friends and family. Please encourage them to subscribe to us and to follow us on Instagram as well. The more subscribers, the more followers we get. One, we feel happy and cozy inside that you guys are supporting us. But also, since we grow as a YouTube channel and as an Instagram page, we're able to reach out to others that maybe need our content and maybe desire our content. And we want to be able to reach out to them as well, so that we could help as many people as possible. And if you would like to understand what other services we provide, please reach out to us at pgnaccounting.com, where we have a list of who we are, the different services we provide, and also you can contact us there with your personal question, and we'll get back to you as soon as possible with an answer. But you can also set up a free consultation with us via our website, pgnaccounting.com. So please go on there, look at our services that we provide, and set up that free consultation as soon as possible. Now back into our video, we're going to be going through an Excel spreadsheet, which we're going to be starting out with the budget template that we provide our clients. Again, please contact us for this budget. I would say simple budget. You could get a little crazier. You could manipulate this however much you want. But I think that this is really good for beginners because it doesn't have a lot of bells and whistles. You're able to understand it. It's very, very basic, very bare bones, nothing crazy with all these formulas going crazy and updating. It's just a simple manual data entry and keeping track. Takes 5-10 minutes, especially when you get the hang of it. Nothing crazy, nothing to it. So when you guys request a budget template, it's obviously going to be blank, just like this. It's going to say budget planner, month, year, some nice little visuals of projected versus actual. You're going to have your cash flow over here, where it takes into account your total income and expenses. It's going to have your monthly income, which this little snapshot looks familiar and from part 1, if you guys are paying attention, and from part 2 as well. Then we have our monthly expenses, broken down into different categories of transportation, of food, personal care, entertainment, loans and savings, housing, gifts and donations. And again, you could add different subcategories. You can add broader categories. You could do whatever you want with this budget. That's the beauty of it. Make it personal, make it yours, make it so that it's not like a chore. It's like, wow, I get to go and update my own personal budget. Yeah, like let's make this fun as it possibly can be. But it definitely doesn't have to be dreadful. And then over here in these columns, we're going to be listing out our actual detail of income coming in by each transaction and expenses going out each transaction. So you're going to put in here Taco Bell, food, $6.99. And again, we're going to be going through that budget, but this is just going an overview of the blank template. And to the right over here, we have little informationals of how to budget and certain tips of this exact budget. So if you guys get this, make sure you guys are reading this. So that's the blank template. Obviously the tab says month and year, and this says month and year. You're going to update that based off of whatever month and year it is. So November 2022 or December 2022. And you're going to update the tab as well. Now, let's update and create our first budget. So with that template in mind, you're going to go in and you're going to start updating a budget on your own. So this is through November 1st of 2022. So this is an example walkthrough. It's not going to be perfect. It's not going to be exact. There might be some errors in this, but again, bear with us. It's really hard to do this as an example. So don't nitpick here and there. Just you kind of take all the best that you can through this, and hopefully it does benefit you in creating and updating your own monthly budget. So you're going to want to update this little cell right here, November 2022 or December 2022, whatever month you're in. Over here, I put in yellow where it says input. So you're going to see some cells that are highlighted in yellow, which there's a lot of them. And that's where you're actually going to be inputting numbers and the detail. You're not going to want to type in here where it's white or over here because that doesn't really, you don't want to mess up with the formulas, especially the numbers that are not highlighted in yellow. Do not type there, because if you do, then you're going to mess up the whole budget template, and then you're going to figure out, well, why aren't things tying out? Something's off. I don't like this. And then you start getting frustrated. So just kind of play within the guidelines. Only input where it's yellow, especially for the numbers. So obviously over here, you could type in your actual job or your side jobs. You could update these even though they're not yellow, but just be careful with the numbers. Don't update these just because they're formula based. So when you're going through your budget, we talked about a lot about this in part 2. So I don't want to repeat much that I said in part 2 over here, because you can always go back and rewatch that if you need to. But we're going to be listing our income. So projected income, let's say, is $5,000 from your main job, your take home for the month. You're projecting $5,000, so you're going to want to type in there $5,000. And then let's say your side jobs, it's about $500, so you're going to type in there $500. Same thing over here. Again, this is all projected column. This is what you're projecting for November. This is how much I'm probably going to bring in. And you're going to get the feel of that based off of prior months or something that you know that's going to occur in November, like a bonus or something like that, or a big side job. Other income is $300. So we're projecting for this month that we're going to make $5,800 take home. Now, what's actually going to happen might be different. Now, monthly expenses. This is the category of transportation. So you have your car payment, insurance, fuel, maintenance, parking and tolls, other. Now you don't have to use these categories. You could change these however you want to whatever you want, or even add another row. But again, this is just an example. So we're saying that these are going to be our projected monthly payments for next month. You're going to type in there 250 or 50. So you're going to want to project what you might spend. Now, food, there's dining out, and then there's groceries. I like to separate those, and I definitely recommend that you do as well, because you might spend more in dining out or going out and grabbing drinks, and you don't want to commingle that with your buying your milk, your bread, your eggs, whatever. You don't want to really mix those two. Now you have your personal care, haircut, going to the spa, clothing, gym, home. If you have babies, I like to put that under one category of diapers, wipes, formula, toys, blah, blah, blah. Medical, that's obviously outside of your health insurance premiums that are taken out of your W-2 job. This could include deductible or copays. And then I like to add in other, just because there's always something that doesn't fall in those categories. So if it doesn't, it'll go under other. There's entertainment, so movies, cell phone. Again, if you're not using a category, you can just put it blank and reserve it for future use. Travel, Spotify, iTunes, or other. Then there's loans and savings. So there's credit card loans. These are the monthly minimum payments. Keep that in mind. So you're going to type in the monthly minimum. And then you have student loans minimum. And let's say you're projecting, I'm going to put in $500 for a Roth IRA this month and $500 in savings this month. And then you go to housing. So you have $1,150, you have $500 for utilities, laundry, that could be like dry cleaners, even though we have it listed here. But a lot of people pay for laundry services, or they live in an apartment building and they have to pay to use the washer and dryer. So if you have that, obviously include that. If you don't, rename the category to something that is more useful and personal to you. Gifts and donations. So this gifts, it could include weddings, baby showers, birthdays, you name it. There's always some event going on. So definitely going to have to add it to your budget. So let's say 500. And then again, I always recommend giving to your church, giving to a charitable organization, or even a community or a person in need. Just add that to your budget. And we put in 150 here. So after you update all of these projected columns, they're going to automatically flow to this cash flow. So right now for November, we are budgeting $5,800 for income. And for expenses, we are budgeting $6,378. And don't be shocked by that. Yes, we said zero-based budget, where this income has to less the expenses, this has to be zero. And yes, that's correct. But I like to go through my expenses and what they actually might be, and then see where things tally up and be like, whoa, I'm spending way more money than I made. I'm projected to spend almost $600 more than I make in November. That is not okay. I either have to bump up my income and get another side job or two, or work a little bit more overtime or whatever to cover that $600 gap, or I need to go in here and spend less money on food, or spend less money on the home or clothing, or maybe buy generic brand diapers and wipes and formula, or don't go to the movies that month. So this is where it's really nice to see, like, oh my God, I'm projected to spend so much more than I made. I'm able to correct that now before the month begins. That's why a budget is so crucial. You could control, you could have visibility on a crisis of spending more than you make before you actually do it. So you're able to fix it before it's a problem and before it becomes stressful. So you're going to want to update that projection to be zero. And we just want to show that in there as minus 600, just to show like, A budget doesn't have to be perfect. It's not going to ever be perfect, especially when you're a beginner in the first couple months. It's something just to help you. It's a tool for you to grow financially and to keep track of your money and to control your money. Now over here on the right, we're going to be listing the actual income projection. So over here is not what you're projecting. It's not this projection column. This is actual column, what you actually made, what you actually spent. Over here, these are going to go to these actual columns. Now, it's not formula based, at least not yet. The template that you're going to get is not formula based. So you're going to have to do this a little bit manual, but you're going to take, let's say, okay, I'm going to make $2,500, or I made $2,500 in my pay stub. I'm going to put it in here. I did side job of Uber. I made $230. So I'm going to put in here my income transactions just to keep track of all of it. Now, I like to usually leave these as black before I enter it in there, just kind of as a self-check. And then once I go in here, I'm going to say my main job. So you're going to hit the equals, and then you're just going to type that, include it in there, and now it's included in there. Whereas this, let's say it's not in there. So side job is Uber. So you're going to hit equals, and you're going to add that. And now it's in here as 230, and you saw it automatically updated these as well. So I like to leave it as black, knowing, hey, it's not entered yet, but then, or it's not assigned to a category yet. But once I do, then I'm going to highlight it as red. Now, again, this is the way we do it. It doesn't have to be the way you do it. If you find a better method for yourself, please do it your way. Whatever works. Now, that's for income. That's pretty easy. Pretty simple, huh? But for expenses, you're going to be like, well, why are these orange? Why are these red? I thought you said you entered them as black. And we do. So I like to put in expenses that, like, hey, I already know I'm going to spend this money. I know rent's going to be $11.50. I know Spotify's going to be $12.99. I know I'm going to spend that. So I like to put it in here already as actual, because I know it's going to auto credit my credit card. I know it's going to auto debit from my debit card. I know it's going to be an auto withdrawal for rent paid out. I know it's going to be that. So what I like to do is I put it in as red because it's already assigned to a category. So same thing as we did with income. You know, you're going to do equals, and then you're going to take it from here just so that it goes to the right category. But I like to highlight it as orange, signifying to myself that the auto charge, the auto withdrawal hasn't actually been made yet. So let's say the cell phone bill gets charged on the 21st of the month and it's only the 1st. This is going to be orange until the 21st. Now let's say it's the 21st and I'm updating the budget and this was charged. Now I'm going to update this back to yellow. I'm saying like, okay, it was charged. So that's just kind of the way we do it. And again, if you don't want to do it that way and it's a little confusing, you don't have to do it that way. But again, that's how we do it. That's one check, is typing in as black. So first it should be black until it's assigned to a category. So it's $2,500 again. So right now it's not assigned to a category, it's black. And then we're going to update it here. So plus that new one, and now it's 5,000 because now it's including this. So we're going to want to mark this as red. So now this includes both, and this 5230 is included here. It's all formula based. But now let's double check ourselves. So right here it says $5,230 for income, $3,062.99 for expenses, and this check figure formula says 0, so we're all good. And if you want to double check yourself, then this 5230 should match this 5230, and then you see expenses here of $3,063. And it matches here, 3,063. So we're all good over there. So I'm going to redo that just so that my example is back to normal. And now that's how you create a budget for the first month, for either the day before the month begins or it's the first of the month. That's how you want to start out. You want to do your projections. You might not have these expenses and these income amounts in here because it's the beginning of the month and it's the first of the month. But just again, it's for the example's sake. Now, it's the 15th of the month, and as we recommended in part 2, to update your budget on a minimum of twice a month on the 15th and the last day of the month. Now we're updating it. It's November 15th, so we've already gone through the first half of the month. So we inputted our income transactions, and we categorized it to each actual. So as we showed you earlier, we already know how to do that. And now for expenses, we already went through the first half of the month. So a lot of charges came in, a lot of things that we knew we were going to spend money on, like rent, got charged to our account. So they're no longer orange. They're actually yellow because they were charged. Some are still orange because that, again, cell phone is going to be charged on the 21st and it's only the 15th. So some things didn't get charged yet. So that's why they're still orange, but we know we're going to spend that money eventually. So we're leaving it in there, but just highlighted as orange. But then you see all these other actual expenses like movies. We went to the movies, spent $12. It's entertainment. Or dining out, food, $119. Now you could put specific Chili's, Fig and Olive, or Taco Bell, or whatever. You could go as detailed or as general as you want, just so long as you're budgeting, you're understanding what categories are you spending in, and you're tracking it accurately. NICOR gas is housing utilities, so $115. That's going to go and be linked to this where it says actual utilities. And you'll see right here, this formula-based captures NICOR gas, ComEd, and this water bill, and cable and internet. So this formula is including all of those in this actual. And now you have all of these actual expenses through November 15. You double check yourself. Okay, income checks out, it's 0. So that means that everything's accounted for in these columns, these categories over here. Expenses, 0, so it checks out. That means that all of the expenses are assigned to a category accurately. Nothing's double counted. Nothing is missed out on. This is an actual and accurate representation of all of the money that came in and all of the expenses that went out through November 15. Now, the reason why we say to update at minimum on the 15th and the last day of the month is because you've already gone through the first half of the month. So now you could kind of see, I spent this much on food for the first half of the month. I only have this much for the second half of the month. I need to tone it down, or I could just keep doing as I'm doing because I'm doing great. And I'm kind of keeping track on what I thought I was going to spend. So the way you could check that out is compare your projected versus your actual. Okay, so for car payment and insurance, I was spot on. I knew exactly what I was going to spend. I didn't spend more, and we're good. Now gas, the first half of the month already went by, and I spent $119 of my $175 budgeted total. I only have $56 left. Now, if the first half of the month is any indication of how the second half of the month, I might be over budget. So I might not want to take a long road trip in the second half of the month. Or I might want to make sure that I spend less in a different category to make up for that added fuel cost. Just so you're not going in the red and you're not overspending on your total income. Now for maintenance, you thought 50. but you for the whole month, but you only spent $8 so far for the first half. You have $42. Now that doesn't mean, oh, I need to go and spend an extra $42. This is just a guideline, like, hey, I shouldn't spend more than $50. That's what I thought I was going to spend. That's what I could afford. And I shouldn't spend more than $50. You could happily spend less than that, and now you have extra room in the budget to maybe cover for fuel costs that were more than you expected, because gas prices were $5 and you didn't expect that and you didn't budget for that. So gas is more than what you thought it was. Now, so you don't, just because you're under budget in a category doesn't mean you have to go out and spend that extra savings. You could use that savings to pay off debt, or to increase your savings, or to cover another expense category that you're spending too much in. Again, this is personal finances. You could do it however you want. Now, for parking and tolls, you already spent $34, which is $9 more than what you budgeted for the whole month. So let's not spend anything more on parking and tolls. Or it was an inaccurate projection for parking and tolls. So that means that we inaccurately budgeted for parking and tolls than what we were going to spend money on. So we'll definitely account for that in December if we have to adjust up for parking and tolls for that month. Or maybe it was just a one-time fluke. You went out and you paid $20 for valet and you gave him a $5 tip. So now you're way above what you normally would spend on parking and tolls. And November is just an uncharacteristically high month. So the reason why you do a budget is because you could actually go in the detail, see what you spend money on. See, is that just a one-time thing, or is that going to happen every single month? You don't know unless you do a budget. You keep track. You assign categories. Now, you added a little bit of other in here for $50 and you didn't spend anything. Great. Now they'll cover the parking and tolls extra and the fuel extra costs than that you didn't anticipate. Now for food, we talked about this. You already spent $135 of your $250 monthly total. So you got $115 left. So now you're halfway through the month. Let's budget that $115 to last us the whole rest of the month. Same thing with groceries. You only have $189 left. Let's make sure we ration that out for the rest of the month. No huge Costco trips for the rest of the month with only $189 left. And so on and so forth. A lot of these, you're going to be able to see, hey, I'm doing a lot better. I'm doing a lot worse than I thought I was, or I'm right on the dot than what I thought I was. So I'm just going to keep on that trajectory. The benefit here, again, is knowing what you're spending money on, controlling your finances. Hey, I spent more on food than I thought I was. I'm gonna decrease that. Hey, maybe I shouldn't spend so much money on parking and tolls or gas. Maybe I should decrease that. Or I know I'm gonna have to spend that anyway, so I'm gonna increase my budget for that and decrease somewhere else. It's like a give and take. You're gonna manipulate it and change it month to month on your needs and how you change on your preferences on what you like to spend money on. But the whole point is use a budget to track your income and expenses, to see and make sure that you're not spending more than you make, and you control your finances so that you're not making financial mistakes retroactively trying to fix them. You're more proactive and foreseeing a problem before it actually becomes a problem, and you're able to fix it. So obviously we planned and budgeted for Roth IRA and savings, and we're right on the dot. So there's no variance there. There's no wiggle room there. But if you're underspending what you thought for projections, you could definitely increase the savings to $700 or pay off more debt than you thought you were able to. So that's where the nice wiggle room and seeing how you're doing really comes into play here, and you're able to kind of spend in more categories than you thought, like paying off more debt or increasing savings. So this whole actual, now we're going through it all, and let's see what we projected versus what was actual now that everything's assigned to a category. So nice little bar graphs over here of projected versus actual, and I don't really care for those, but some people like visuals, but I like the numbers. Obviously I'm a CPA, so I like the numbers, so show me the numbers. You projected for income $5,800, but you only made $2,730. That means that you are earning $3,000 less than you thought you were so far for the month. Now, if that's gonna keep going, that's not good, because that means that you're making less money than you projected. Or it kind of kicks your butt into gear and be like, maybe I should work a little bit more overtime, or I should take another side job, or work a little bit more on the side to bump up that actual income to my 5,800 projected, because that's kind of what I was going and guiding my November income and spending based off of. So it kind of gives you a whole second half of the month to kind of adjust, which is great. Now for expenses, you projected that you were going to spend $6,378. Now we're 15 days through November, the first half, and you already spent $4,601. Granted, some of these expenses you are adding in there that haven't occurred yet, so this might look worse than it really is, but you only have $1,777 left to spend for the second half of November. So is that good or it's bad? It depends on you. Are you able to make sure you don't spend more than this for the rest of the month? Or do you have to adjust in a certain category and adjust your lifestyle for the second half of the month? Maybe you don't go on a spontaneous road trip or trip in the second half of the month because you don't have so much wiggle room. Or you're doing so great that you can afford to, or write a lump sum check to pay off a lot more debt, or go on that spontaneous trip with your friends for Thanksgiving, or add a little bit more to your savings so that you could reach that car goal or your home purchase a little bit faster. That's the whole point of budgeting, is you're halfway through the month. How can I adjust things now that I have an extra 15 days to adjust? So now we're on the last day of the month. All expenses are accounted for. All income is accounted for. Now let's see, how did we do for the month? And you should do this no matter how often you have checked your budget and updated your budget throughout the month. Again, we recommend minimum that you do it on the 15th and the last day of the month. So we're checking on the last day of the month as recommended. And we're going to go through and see how we really did for November. Did we do really bad and we're a little ashamed about it and we don't really want to look through this because it's really cringy? Or did we knock it out of the park? We killed it this month. We took so many side jobs. I wasn't really even home because I'm making so much money. Or I did so good with my expenses and managing that for the month that I spent half what I projected for the month. But again, we don't know until we get into the details. We get into the numbers. So let's do that right now. Now we kept track of all of our income here. We got our pay stub on the 15th. We did only one side job. We got gifts for the husband. So that's a little bit nice. People were generous, gave $275 for the hubby. That's great. Really appreciative. And then we got our last pay stub from PGN Accounting on the 30th of $2,500. So that's a total of $5,725. So we're gonna put that in here just like we showed earlier. You're gonna do the equals, but sometimes if you already have something in there, you're just gonna want to click in here in the formula and add another one. instead of doing equals every time. And then you're going to keep track of that. And we know that we kept track of everything. We accounted for everything because this check is 0. So we made $5,000 from our day job, which is exactly what we projected. Sometimes that's really easy because it's a salary. It looks like over here it's a salary, so it's really easy to accurately predict how much money we make. But for side jobs, we only made $450, but we projected $500. So we actually made less on our side jobs than we had originally thought. So that's not really that good. It's already bringing us into the negative of $50 overall. Now for other, we thought we were going to get $300, but we only got $275. Maybe we thought someone was going to be a little extra generous for the hubby, but hey, they weren't. Maybe they did their own budget and they're like, whoa, I can only afford $275, not $300 for this guy. Who does this guy think he is? I'm not going to go in the negative for him. I'm only going to give him $275. So now that kind of hurts you because you budgeted $3. They only give you $275. So now you're in the red, $25. Not a big deal. So that was all of our income, and it gets tallied up here based on the formulas. So we made actually $5,725 versus what we projected of $5,800. So we're have a variance of $75. That means we projected more than we actually made, which is fine. Obviously some things fluctuate a little bit. It's not going to be exact, your actual versus your projected, but that's pretty close. It's a pretty accurate projection of what you were going to make that month. You were only off by $75. It's not a big deal. Let's not cry over it. We could hone that and refine it for the next month of December so that we could get it even more accurate or even exceed our projection. Now for expenses. Now this is where it really comes into play because look at all these transactions that we entered in. And again, there's no orange because it's the last day of the month. There should not be any more orange over here. Everything should have been charged to your debit card or your bank account or your credit card. Everything should be charged through the end of the month. So no more orange. Everything is red because it's all accounted for in one of these categories. Nothing is double counted. Nothing is missing because everything is red and this check mark is 0. So we're all good to go. But we do a little overview before we get into the details and we're like, hey, I projected that we were going to spend $6,378 for the month. But we only spent $6,248 for the month. Awesome. That means that you actually spent $130 less than you projected. Bravo. However, you made $75 less than you projected. So we're actually at a net difference of $55 in the benefit column. That means that you, for cash flow purposes, did $55 better than you projected, which is good. That's pretty good. However, we projected that we were going to lose, that we were going to spend more than we made by $578. That's what we projected. However, again, we had that $55 net benefit. So we actually spent $523 more than we made in November. Now again, do not cry over this. It is your first month of budgeting. It's fine. Nobody's going to call the cops on you because you spend more than you made. But this just shows the importance of why we should do a budget. Because now that you spent $523 more than you made. Whereas if you're not doing a budget, you're just going to see your savings decrease or your savings not increase. and money coming out of your checking account. You're like, wait, what's going on? Why is that going down? Why am I getting close to zero in my checking account? That's not good. But you have absolutely no idea why. Because guess what? You didn't budget. You didn't look at categories. You didn't look at your actual expenses and your income. This is why we budget. Because we're able to be like, I spent $500 more than I made. I know why my bank account's not increasing, but it's actually decreasing. I know why I wasn't able to put into savings so much, put into debt so much. And we're going to go into the details of why did we spend so much more money than we made. So we go through here, and again, looks like we were right on the dot for car payment and insurance. Looks like we kind of honed it in. Maybe we didn't travel so much, so we actually spent only $171 on gas versus what we projected of $175. Maintenance was only $8 versus what we projected for $50, but we spent double in parking and tolls than what we originally thought we were going to. That's $29 more than we projected. Maybe that's an area we kind of have to look a little deeper into and be like, why did we spend so much money on parking and tolls? Maybe it was that one-time dinner, nice dinner, where we spent $20 parking plus $5 tip at the valet. Now, you didn't spend any money on other for transportation. That's great. So maybe we could decrease that a little bit in December if you're not expecting any one-time cost for transportation. Now, dining. Here's a little bit of red. Red is not good in this column. Red is not good in that column. So you spent $385 dining out versus what you projected, $250. You spent $135 more in eating out than you originally budgeted. Not good. That means that you probably went out, or you splurged on some fancy dinner, or you went out way more often than you probably should have. Something went wrong in the month of November. Again, nobody's going to call the cops. Nobody's going to tell on you. This is all for your benefit, and this is all for you to adjust your spending. Maybe $250 is not a realistic goal. Maybe that's not realistic. Maybe $300 is more realistic, or $350 is more realistic. Adjust that. Be realistic with your budget. Okay? If you don't have some unrealistic goal of I'm going to spend $100 on dining out, but you never achieve it, and you always feel so bad of why am I always overspending than what I'm projecting? Be realistic. Okay? If $350 is what you actually eat out every single month, put $350 in there. But adjust other categories so that you're not going in and spending more than you're making every single month. Maybe, hey, I don't want to sacrifice eating out and drinking with my friends, so I'd rather sacrifice my buying clothes every single month, or going to the masseuse every single month and getting a massage, or going to the chiropractor, or buying things for the home. I'd rather sacrifice that stuff than my eating out category. This is your personal budget. You do what you have to do for yourself. Use this for yourself. You're not handing this in to me to double check how I did for the month. This is all for you. Okay? So if you're not being truthful to yourself on what you actually spend, then you're only hurting yourself. So please be real with yourself. Please don't have some unrealistic expectations of your income or your expenses. Be real and use it as a tool for yourself to build financial wealth and pay off debt faster and benefit you in every aspect of your financial life. Now, here's another category that we spend a little bit more than we thought. Groceries. We spent $84 than we budgeted. Again, is $400 realistic for groceries? Maybe we had a dinner party and we had to buy a little bit more groceries than we normally would for the month. That's fine. But we should kind of know that ahead of time if you can, so that you could budget at the beginning of the month or in the middle of the month, so that you could adjust, or you adjust in a different category. Now here's a couple other red flags of clothing and babies. It looks like, you spent $81 more than you projected in clothing and makeup, and you spend $120 more in babies, like diapers, wipes, formula, toys, whatever, than you originally projected. That's not great. But you actually spend $150 less on the home than you originally projected. That's great. That's awesome. The whole point is to control your finances, to not be stressed, to see where you're spending in certain categories, see where you need to tone down, see where you need to ramp up, see where, hey, I'm spending more than I make. Let's adjust accordingly. This is fine. This is your first month budgeting. It's not going to be exactly zero variance every single month. There's going to be some times where you overspend or you underspend, but the goal is to know where you're spending and to kind of hone in on certain categories so that, you're not overspending every single month total. Now over here, it looks like we spent exactly what we projected we were going to make. Now it looks like we spent exactly what we projected. There's no variance here. That's fine. We were able to contribute $500 to Roth IRA and $500 to savings. Maybe for this month, since we actually spent more than we made by almost $523, maybe we shouldn't have spent into savings or retirement or as much into those categories. Maybe we should have spent zero in Roth IRA and zero in savings and put that difference towards the debt so that we could actually be at, again, a zero-based budget, which is income less expenses equals zero instead of minus 523. This is where we need to make certain adjustments. We have every dollar allocated and we're maximizing our budget so that we're not going in negative every single month. And yeah, you might have to decrease savings here and there, but the goal is as each month comes and you're doing your budget and you're updating, that means you're getting better with your finances. You're honing down in categories where you're overspending, and now you're decreasing that category. Now you have a little bit more wiggle room in your budget to increase those savings even more beyond $500 per month. Maybe now you created so much wiggle room that you're paying $300 per month on your credit card, $300 for your student loan, $1,000 for your Roth IRA, and $1,000 into your savings. And you think that's wild. You think that's you guys are dreaming unrealistic dreams over here. You're not going to do that right away. But as each month goes by and you get better at this and you start to control your money and not let it control you, you're going to see, hey, there's way more room in my budget than I originally thought. I was overspending on subscriptions. I canceled half of them. I don't even use half of them. So this is where it's like, I'm going to benefit myself to reach my financial goals. And yeah, I might think that those are pie in the sky dream financial goals, but I'm telling you, they are achievable. But the way you eat an elephant is one bite at a time. If you want to start increasing your savings by 2x or 3x, you have to do it little by little, month by month. That's how you reach that 2-3x what you've originally been saving in your savings account or your retirement fund. I'm telling you, it's possible. You just, this is where you're starting. You're a beginner. This is the first step is creating a budget to get to that financial success. And now in these other categories, it looks like, you spent more, you spent less, but the whole point is to track your expenses, to track your income and your expenses, to see, hey, am I overspending? Am I underspending? How am I doing in certain categories? And that's the whole point is you should be updating it, realistic projections for your income and each expense at the first day of the month, November 1st. And then you should, at minimum, update it on the 15th or the halfway point of the month, and then update it on the last day of the month to see how you actually did. And then repeat that process every month. What I like to do when I'm starting my next month, December's budget, is, hey, how did I do in the car payment, in the fuel, in the maintenance? How was my actual? Well, I budgeted 50 for last month. I budgeted 175 for last month. Well, for December, I'm expecting nothing crazy, about the same activity. I'm okay with that budget of 175 per month for fuel. I think that actually is pretty accurate for December. Well, for maintenance, I only spent $8 and I projected 50. And for other, I projected 50 and I spent $0. I'm way overestimating how much I'm projecting in these categories. So maybe I only do 25 and I do 25, or I do 0 and 0. Whatever fits your budget, then do that. But then over here for dining and groceries, for December, if it's going to be similar to November, then this might actually have to be $350 or $400 for dining out. And groceries might have to be $475 or $5. Again, be realistic. Don't be unrealistic and set yourself up for failure. You're going to feel terrible. Now, I'm not all supposed to be all mushy-gushy, make you feel good, because you should be honing down on your expenses and ramping up your income. But you should also be realistic on what you're actually spending and what you're projected to spend. Now, I really hope that this walkthrough of creating your budget from blank, updating it on the 15th, and updating it and reviewing your budget on the last day of the month, the 30th or 31st, is really helpful. The whole point of this 3-part series is, again, how to create a monthly budget for beginners in Excel and Google Sheets. It's a very hands-on, zero-based budget. Yeah, it might take like 5-10 minutes once you get the hang of it, but initially it's going to be like 10-15 minutes. Who cares? The whole point is you're budgeting now. You're taking control of your financial future and your money, and you're not letting it control you. Money does not have to be this stressful thing. And the biggest part is being able to start a budget. Control your money. Don't let it control you. The whole point is to let's not let it get stressed out. Let's not let it be this weird topic that we can't ever talk about, because everyone spends money. Everyone makes money. The world revolves around money. Unfortunately, it doesn't have to be the root of your happiness, but guess what? Everyone transacts in money. So we should learn about it, and we should really educate ourselves on how to handle money, how to pay off debt, how to control our income and expenses, how to increase our income, how to decrease our expenses, and just track it and build financial wealth. I think we all should do that, and I don't think it's taught enough in our schools. And definitely people lack this knowledge, which is why we, PGN Accounting Group, have started our YouTube channel and started this mini series on budgeting and created an Instagram pages, because we want to be that resource for people where they feel like they don't have the knowledge. They were never taught by their parents or in school as a kid how to budget their money, how to pay taxes, how to write off and save on taxes, how to create a business, how to convert a business from an LLC to an s-corp. A lot of different tax, accounting, personal finance topics that people never talk about, but they don't know where to turn to. So please subscribe to our YouTube channel. Please follow us on Instagram. It really helps us a lot knowing that we're appreciated for the content that we produce and we research and we tape and we edit. It takes time to make these videos. So we really appreciate a subscribe and a follow. And also it helps grow our platform presence to broaden our reach to new audiences and really help them as well, to teach them about personal finance and tax and all the other topics that we're going to be talking about on our YouTube channel and Instagram page. Also, please reach out to us on pgnaccounting.com. Set up that free initial consultation. Share with your friends and family our website and our YouTube and Instagram. Please spread the word, and so that everyone knows about budgeting, taxes, and all these other topics, because not enough people know, and you'll be surprised at how little people know and how little people are willing to ask questions because they're ashamed of it. Whereas you're able to watch a YouTube video in the privacy of your own home and educate yourself, and not let everyone else know how uneducated you are in this topic, because we should not be ashamed to learn and to understand what we don't know. We should always be learning, and we should always be improving ourselves. Thank you for sitting through this 3-part series of budgeting. We know it's not the funnest topic, but we try to make it a little bit entertaining with funny memes here and there and funny pictures and some jokes once in a while. But thank you again. We really appreciate your viewership and subscribing and following us on YouTube and Instagram. We really appreciate you guys sitting through these series. And again, if you have any questions, please do not hesitate to contact us at pgnaccounting.com. And if you missed any of our other videos, please go to our YouTube channel and click on the previous videos. If you missed part 1 or part 2, or if you want to rewatch parts 1, 2, and 3, please do so. Please use it as a refresher. And I really hope that you guys found these videos useful and that you share it with your friends and family. Thank you again. We really appreciate it. Until next time, take care.